Hello, financial future enthusiasts. If you're 65 or older, today's video is tailor-made for you. I'll be diving into the details of an additional tax deduction that might just be the key to reducing your federal liability and potentially boosting your IRS refund. So, stick around as we explore how you can pocket anywhere between $1,500 and $3,700, depending on your specific situation. Intrigued? Of course you are. Any extra money from the IRS is always welcome news. Let's get right into it. Now, before we jump into the nitty-gritty, a quick disclaimer: this is not tax advice, accounting advice, or legal counsel. I strongly recommend consulting with your accountant, CPA, or a tax professional who can analyze your unique situation. Let's proceed with caution and get into the exciting details. You might be wondering how the IRS determines if you're 65 or older. Well, here's the scoop. If you were born on January 2, 1959, or earlier, congratulations, you fall into the 65 or older category. If you're under 65 but legally blind, there's something for you too. But remember, solid legal documentation is crucial. Now, let's break down the numbers. If you're single or head of household and 65 or older, the additional deduction is $1,850. Married? Well, for you, it's $1,500. Now, if you're under 65 but blind, you can also claim $1,500. Remember, the IRS is serious about blindness verification, so ensure you have proper documentation. Now, let's talk about the power combo 65 and blind. If you're single or head of household, you're looking at a whopping $3,700 deduction. If you're married, filing jointly or separately, and both of you are 65 and blind, it's $3,000 per qualifying person. That's a game changer, reducing your taxable income significantly. Financial future fam. Today, I've got some exciting news about a new bill for SSI that could bring in some positive changes, including $1,886 monthly checks for Supplemental Security Income recipients. I've got all the juicy details you need right here in this video, so let's dive right in. In this video, we're shining the spotlight on SSI, specifically focusing on the approximately 8 million beneficiaries who depend on this crucial program every month. I'll be breaking down the details of a new piece of legislation that has the potential to revolutionize SSI, bringing about a $1,886 monthly check for certain beneficiaries. This bill aims to reform the program significantly, addressing one of the most disliked provisions, the marriage penalty. Now, let's talk about this game-changing legislation, known as the SSI Savings Penalty Elimination Act. It's a bipartisan effort, meaning support from both sides of the aisle, but the big question remains: why hasn't it been passed yet? I wish I had the answer, but let's focus on what this legislation could mean for you. One major win is the elimination of the marriage penalty, a provision that has irked many SSI beneficiaries. Currently, being married comes with a 25% reduction in benefits, resulting in a significant monthly cut. However, if this legislation passes, we're looking at the removal of this marriage penalty, potentially boosting your combined monthly benefits. Additionally, the bill addresses the asset limits for individuals and married couples. The proposed increase would allow individuals to have up to $10,000 and married couples up to $20,000 without facing benefit reductions. This is a positive step towards providing more financial flexibility for SSI recipients. While this legislation draws on some provisions from the SSI Restoration Act, it stands as a standalone bill, bringing potential positive changes to the SSI landscape. It's a step in the right direction, and I'll be keeping a close eye on any developments. Stay subscribed for real-time updates. If you found this information helpful, consider sharing the video with your friends, family, or anyone who could benefit from these insights. And of course, drop your thoughts, questions, or feedback in the comments below. I love hearing from you. That's it for today. Enjoy your day, take care, and I'll catch you in the next Financial Future Update. Until then, stay financially empowered.